talk about the global cues. Then here's Nigel with the world view.
Well, positive cues coming in overnight. The U.S. markets ended well in the green. The S&P 500 gained for the first time in the last 3 trading sessions. There was stability in terms of bond yields, and on the back of that, we saw some of those banking stocks saw big gains overnight. Citigroup, Bank of America, Goldman Sachs, JP Morgan Chase, all of them were running along. We're up close to around 1% to around 1.5% approximately. So we had a rally in the equity markets, but some of the economic data coming out of there is still fairly cautious. The housing starts, that missed estimates, fell close to around 8.7%. There was consumer sentiment data as well. Did see a bit of a contraction if you're looking at it in terms of the data point that did come out. It fell to around 124 from around 131. So that's telling you that some of that economic data out there is not looking very convincing. Shifting focus though to the European markets, we did have all the 3 indices ending in the green, and you had one of those stocks, Bed Bath and Beyond. In fact, that stock was up close to around 20% odd. There was talk that activist investors, they're looking to replace the entire board. So on the back of that, that one was up close to around 20% approximately. Well, Airbus, that was another stock that was up close to around 3%. China's looking to buy close to around 300 planes from there for a deal worth billions of dollars. So that stock was higher. But shifting focus then to the Brent crude prices, that as well did see a bit of a spike up. NYMEX has breached the $60 per barrel mark. And even in terms of the currency space, there was some strength that we saw on the dollar index that in fact had moved beyond the 96.5 odd mark. Asian markets today, they're more or less mixed. The Nikkei is the one that is underperforming because the move we're seeing in, in the yen. And the SGX Nifty is indicating maybe we'll see a bit of a red tick just to kickstart trade. Back to you guys.
Okay, thanks a lot for that. So let's see, after that fabulous smooth run that we had on the upside yesterday, will today be a day of consolidation? Only time will tell. But moving on to some more opinion, Mohammed El Arian, the chief economic advisor at Allianz, says that the yield curve inversion does not signal recession. He adds that he expects the US economy to grow at 2.5% to a healthy 3%. Listen in.
I understand why people worried about it. When something happens for the first time since 2007, people pay attention. And that's what happened on Friday when you got the inversion.
Yes.
However, when you look at the economy on the one hand, and also when you look at the determinants of the yield curve shape and move, this is not signaling recession. This is signaling some very peculiar technicals in the market that have to do with what's happening in Europe, that have to do with what's happening in the Fed rather than what's happening in the economy. This economy, unless it gets disrupted by a major policy mistake, is on its way to 2.5% to 3% growth for this year. Continue to have average monthly wage job creation well above what you would expect at this time of the cycle. You're having real wage growth, and people are coming back into the labor market. Business investment is picking up. That's good news for this year and next year. And yes, the effects of the tax cuts are eroding, but against that, government spending is increasing. So put it all together, this still has momentum. This economy still has momentum for this year. There's no way you're going to get a recession. We are in a divergent growth scenario. The US will outpace others. Europe will be lucky to get 1% growth. And therefore, the global growth outlook is uncertain. Now, out of that are self-inflicted wounds, and people started really worrying about growth in the US. We swung too much in one direction last year. When the Fed guided towards 4 rate hikes and delivered 4 rate hikes, I always felt 3 and stop and watch. And now we've swung the other way. I wouldn't give up policy optionality so early in the year. I just wouldn't do it. There's lots of uncertainty. It's not clear how this divergent growth is going to play out. It's not clear how the Fed will reconcile a stronger US economy that says hike versus a weaker global economy that says don't. And I certainly wouldn't have given up the optionality both on rates and on the balance sheet so early in the year.
That's crystal clear that there is growth and there is a chance of soft yields. Very positive, of course, for equity markets. Okay, we have more news for you. It's a power-packed lineup on Bazaar this morning with a host of big corporate honchos and some rarely seen voices who will be joining us. You will hear from Rajesh Jejurikar of M&M. You will hear from Sunil Dugal, the CEO of Dabur, Rakesh Soni of Tata Global Beverages, and Madhusudan Gopalan, almost never heard, the new MD and CEO of PNG India. So fasten your seatbelts. You have a very, very heavy duty bazaar ahead of you.
Oh, absolutely. And the common thread running between all of them is the consumption story, right? Is there a pickup? Is there a slowdown? That's the big topic of debate. We'll take a quick break on that note. On the other side, our list of top 10 stocks is lined up. Stay tuned.